Hello everyone, my name is Orlando and welcome to my channel. And today we're gonna be talking about what you saw in the thumbnail, which was how to get free money. And I promise you, this is not a clickbait video or anything like that. This is literally a great strategy to get free money, right? So let's just jump right into it. What am I talking about when I say, what is the strategy to get free money? Well, this is one of those things where me, myself cannot benefit from because I'm a business owner and I'm not a W-2 worker. And what I'm talking about is 401ks, right? Dropping money into your retirement account. And I want to explain to you one of the things that I tell all of my friends, all of my family, even if you don't want to do real estate, you don't want to do your own business, you don't want to invest in stocks, you have no interest in doing anything. This is the number one thing you should do, period. Especially if you're a W-2 worker, which majority of people are W-2 workers. So when I was growing up, and this is one of the things that I wish I would have done when I was younger and when I was in my 20s, when I had jobs, when I was working at Walmart, I wanted every bit of my $300 paycheck that I was receiving from them. And I mean, I just wasn't interested into saving, but if I just would have had a little bit more discipline, it would have been so worth it in the end. But then again, I didn't have this information that I'm sharing with you today. And before we go ahead and start on that, just please watch through the rest of the video so you can get the entire package of understanding exactly what I'm talking about, because there will be further in the video some strategies that you have to look out for so that at the end of the day, you will be able to receive this free gift of money. So let's just start breaking down the details of 401k and how it really works. Number one, so normally you work at a job and you put money into a retirement account. In that retirement account, your employer will normally match a certain amount of your salary, and some businesses and some companies will match 100%, some will match 50%, but they always match up to a certain percent. So you really have to find out and look into your job to kind of figure out what are their matching practices. Are they gonna match you 50% or 100% of what you put in up to a certain percent of your salary? Or, some companies, if you work for a really good company, they will match 100% and then match all the way up to 6, 7, 8%. It really depends. But let's just go with the normal. The normal is most companies will do a 50% match of your whatever you put in and go all the way up to 6% of your salary. That's what I'm talking about when I say free money. You see where I'm going with here? And then what I want to do is I want to break down exactly how these numbers work. Now, one thing that I want to make sure that I make perfectly clear is that when you start looking into your 401k, you really have to dive deep, really speak to your HR person or speak to someone who maybe you guys have a financial person that deals with just 401ks in general, but you need to ask questions about when you can start contributing into your 401k and when does the company start contributing their portion. Some companies will make you wait before you can even start contributing into your 401k. They may make you wait 3 months, 6 months, even some companies make you wait all the way up to a year. So you really need to speak to your HR person to kind of figure out when and how everything works as far as you putting your money in and them putting their portion of the match in. So let's do a small breakdown of exactly what I'm talking about. And I'm going to use a very common structure that employers use for your 401k. And I'm going to use 50% matching. So I'm going to do a 50% match all the way up to 6%. How do those numbers work? So the easiest way to look at that is that your employer will put in 50 cents for every dollar that you put into your 401k, up to 6% of your salary. Now that's amazing. Right there, before I even get started on that, that is a 50% return on your money. 50% right there, right off the top. That's just really simple math. Up to the 6%, right, of your salary. So if you make $50,000 a year and you put in 6%, that 6% comes to about $3,000, right? If your employer is putting in 50% of that, of the $3,000, that means they're going to contribute $1,500 for a total of $4,500. So once again, you put in $3,000 because 6% of $50,000 is $3,000. Now remember, your employer is going to match 50 cents on the dollar up to that 6%. So 50% or half of the $3,000 is $1,500. When you add up the $3,000 plus the $1,500 that your employer is going to contribute, that is $4,500 that will be in your account for the year. Remember, this is annually. This isn't per month. This is annually. So total, you received in free money, because that's what it is, guys. Let's just call it what it is. It is free money. $1,500 in free money that you would have never have gotten if you did not join this program, if you did not get into your 401k plan. And once again, let's look at the ROI on that. That is return on investment. Or let's just talk about return on your money, right? Let's just be real here. That is a 50% return on your money. Now, if you were to put that into stock, could you gain more? You may. But what's the risks? What is the risk? Let's look at the risks. So if you put money into stock, you could lose it. If you put the money into your retirement account and it is guaranteed that your employer is going to give you that 50% or that 50 cents on the dollar up to the 6%, you can't not beat it. It is guaranteed money. So once again, if you just do that simple math, how can you pass up an opportunity like that? You can't. You can't afford to pass up the opportunity. And for anyone who's watching this that is young, I know you may want to take your money and hold it and go do fun things. And I'm not saying that you shouldn't do that, but if you have an opportunity and you're young to do this, then do it. You cannot pass up the free money, because once you get into your later years, I promise you, you will be like, man, I wish I would have took advantage of that, all that free money that the employer was going to give me. Okay, so I want you guys to really think about this, because this is one of those things that is so important when you attach this to your investing into a 401k. So you're investing into your 401k, and some people may think to themselves, well, you know, I don't know if I want to do it, even though I just explained how you can get free money. But here's another way of looking at this. Okay, you decide that you're not going to invest in your 401k and you are making about $50,000 and you're in a tax bracket of 20%. 20% of $50,000 is $10,000. So you have $10,000. So that means that's what you would owe the federal government in taxes, that 20% of your $50,000. Well, when you invest into your 401k, you have to remember that these are pre-tax dollars. So that means whatever you invest into your 401k, it knocks down your taxable income. So would you rather be taxed if you took that $10,000 and put it into your 401k? You would be dropped down to $40,000, $40,000 taxable. Let's just say you're still getting charged that 20%. That's $8,000 that you're getting charged. You just saved $2,000. But here is the big difference. The big difference is you saved an additional $10,000. And not only did you save an additional $10,000, but you also received free money on top of that. So would you rather give that money to the federal government, or would you rather save it and get additional funds on top of that, AKA free money, from your employer, or pay the government? I mean, I can answer that question. Me, I would take paying myself, putting money into my 401k, and receiving free money from my employer. That's what I would do. Okay, so let's also talk about another tip right here. Another tip when it comes to investing in your 401k is you want to try to maximize the timing on this. The reason why you want to maximize the timing is because there is a limit on how much you can contribute into your 401k. I think for 2020, the limit was $19,500, especially if you have an employer that will match you 100% all the way. Let's just say you max out your amount that you could put into your 401k in October. That means that you missed out on 3 months of your employer matching you. So you want to try to figure out what is the best way to maximize so that you can get your employer to match what you have. Now, I try to avoid putting in small portions or small contributions. So like if you have $50,000 and your employer is trying to match that 6%, you don't want to try to put in, $20 every pay period. You want to make sure that you're able to max out. If you know that 6% and 50% of that, like we did in the example, you have to get to $1,500, you need to make sure that you get to $1,500 throughout the whole year and that your employer won't be able to miss a contribution to your 401k because you miscalculated the timing. Go over on the amount that you put in. If you put in 8% of your salary and your employer only matches 6%, it's okay because the money goes into retirement account. So your money doesn't leave. It doesn't go anywhere. It doesn't phantomly disappear. It's your money still. So you want to make sure, like I said, is that you stretch out and you figure out exactly the timing that's needed. Okay, and lastly here, which is a very important tip. And why is this tip important? Because there is a thing in your 401k somewhere in the fine print that there is a vesting schedule. What does that mean? That means that the money that you put into your 401k is yours no matter where you go. It is yours. But the money that your employer put into it, if you get fired or you leave that job or whatever happens, that money can go back to the employer. So you have to make sure that when you look at your plan, you need to ask, or when you speak to your HR person, you need to make sure that you speak to them and say, hey, what is the vesting schedule? How long do I have to be employed here for those contributions to count and go with me no matter where I go? So if your vesting schedule for your employer is 1 year and you get a better opportunity somewhere, let's just say your employer, you put in $3,000-$4,000 your employer has contributed into it. You need to take that into account because you have to understand that that money will not go with you when you go to your employer. So that is one key thing that you have to make sure that you look at, guys. So once again, if you got valuable information out of this, please hit that subscribe button, like button, and notification button. And I will see you guys on the next one. Thanks.